Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, September the 6th, Labor Day. The year is 2021. Let's talk trading. Wicks. These videos are for educational purposes only. Your results may differ from mine. We talk about looking left on the chart, and we've talked about wicks. And, usually on the Sunday, the weekly opening gap, I will point out certain areas I believe price will most likely hit during the week. Usually I'm just looking at the daily, monthly, and weekly pivot points. So I know yesterday um, I had called out a couple of those pivots. Let's see, I have to find the pivot chart here. Where is it? So many charts. Here we go. And you can see we hit the daily pivot, and we took out the weekly pivot, and we had already taken out the monthly pivot. But what's that got to do with the wicks? It's probably what you're thinking, right? I'm going to bring up one of my templates here. And I'm going to show you how I use wicks to pinpoint entries and to pinpoint exits. Now, yesterday I called short. I said, I'm looking to short the pound. And I believe we were 6 hours, 1, 2, 3, 4, 5, 6, when I made that call. And we were right around 138.50. And so if you look left here, you can see there's this wick here and then this wick here. So I called short around 50, and you see it came here. Well, it passed through this wick and this wick, but it didn't pass through this wick, and then it turned around. Well, notice, it also turned around on the wick of the previous hour. So if I'd gone short, it's like, hey, take your 8 pips and be happy. And you see what happened, price got right back up to that area for shorting. In the next hour, price didn't go above that wick. It dove back into the candle body. So that's an area where you could start to re-enter the trade. And then look what happened next. You see this wick here? What happened when price hit that level? It bounced 1, 2, or it crisscrossed. It came down and came back up 3 times. And the 4th time, it actually closed below the wick, pushed down further and into this wick. And then when it got in this candle body, once again, it's time to take profit. And you see what happened? It came back up. And then what happened here? It left this wick, then it started leaving these wicks, and it came back down and it took out that pivot around the 28. So if you were just taking a trade and targeted the pivot, that'd be okay. It's one of those, I'll put the trade on, I'll put my TP, and I'll leave it alone. And right here, you can see it hit the 30, but it didn't hit the 28. And it took it another almost 4 hours or 3 hours to get there. So, not to mention, it then retraced back about 12, 13 pips. And that would have been hard to stomach if you were watching it. But, if you went to sleep, wake up the next day, well, depending on where you live in the world, of course, you would have seen that all that movement. But it's one of these things where I saw where the pivot was at the 28 level, and I looked here, it was below that open just barely. So once again, looking at these wicks, it's telling me that this is a good level, or this is a probable level where price is going to return to, because I'm looking at the chart and this looks like a return bar to me. And then there's another return bar that's even a bigger one here and here. So I'm looking to see if price will get down to say about 37.85. Well, what's the open? 37.86 on that candle, and a 37.56, call it 37.57. So those are two levels that I'm looking for price to return to if it continues its downtrend here, or down movement. Also, especially if it breaks this level. Now, one of the other things to note about the wicks is it's going to make, it's going to be at the high of the day and the low of the day. Well, that's not rocket science, right? But as we know, price makes new highs and retraces, makes new lows and retraces. So, and we have what's called the holo trade right here. Highest open, lowest open. And as some of you know, on the lower time frames, we've been trading the highest low and the lowest high. But the principle remains the same. So right here, we put in a daily high, retrace. Now, so when this happens on the hourly candle, and you looking to go south, you sit on your hands till the end of the hour. Just don't even trade it. Just wait. Be patient, because almost every time that happens, you're going to see the pattern where price is going to go up, make a wick that doesn't go past this wick, and then possibly come back down. Or, like say in this case, it went down a little bit, but then shot up, and then here it went up past and came back down through. But when you see price make a new high and stay green on the H1, that rule of thumb, don't trade against the H1 candle color. So just don't do it. So in this case, it was green, green, then all of a sudden it turned red. Well, there was your clue. Take that short. Actually, it would have been a Walmart trade at the 60 line. And then you could have just ridden it out. And then down here at the bottom, the same thing, it holds true. You wait. Price was testing the low, but didn't make a new low, turned around, went green slightly, could have picked up a few pips. And then maybe you would have taken small profit. And then on the next candle, which is the current candle, you could have jumped in long. And so I know I'll probably get a lot of questions. You see, the first column here after price is the ATR zone, which is this area and this area. And your best retraces are going to be out of an ATR area. And so in the TRO HL5 indicator, I have all the levels telling me what percent ATR price is away from them. In fact, I think it's this is price away from the open. See, the open's at 0. So right now we're at 38% below 38% ATR below the open. And usually you can expect the ATR to hit about 50. But this is a holiday, so all bets are off. So what I like to see is, at least the wicks to get in the ATR and then just short when price is coming back out of that ATR. Perfect would be if they had a candle close in the ATR, test that high, and then come back and drop right back down. Then the wick is just telling you the wick zone. You can see it is inside the previous day's lower wick zone. So here on the pound New Zealand, it's crossing above the wick zone. Here, let me show you. And actually, maybe we'll switch over to the D1 chart so you can see. So it crossed above the lower wick zone here. Actually, it's crossing above the bottom of the candle right here. Let's see. Here we've got the Swissy, Euro Swissy is in the upper wick zone. Let's see, the Australian yen is crossing below the top. So that's how you read these. And then here, if it's just dashes, you can see it's in the candle body. And so a red dash means it's below the open, and a green dash, of course, would be above the open, a green candle. The next column I have is the rat zone, once again for playing wick trades in the rat zone. Let's see. We've got the pound is in the lower rat zone for the day. See, we're only 12 pips above the low. And we've got the euro. New Zealand is in the upper rat zone. It's only 6 pips off the high. Next is the holo. You can see Australian dollar, New Zealand dollar. This is the highest open for the day. It's 1 pip above it at the moment. And finally, we've got the H1 bars, highest, lowest. So 1 bar ago, it put in the high. So this is saying start to look for trades. That's why it's in yellow highlighted. Here we've got the low was put in this bar. That's why it's in red, to let you know it's making a new low, to give you a heads up. So when you can see it pretty much lit up across the board, those are the best reverse, excuse me, best reversal opportunities. So the thing is, you look and you wait for that H1 candle to close, and then you can start to look for that reversal. So once again, we reversed off the bottom here, tried a new one, tried to make a new bottom, but didn't. And so now we've got price moving upward. So that's some of the ways I use the wicks. You know, the main thing about using the wicks and looking left, you can see, wait a minute, we're in this wick zone right here. So we want to see if price will push up, because what is a wick when you really think about it? Well, sellers were moving the price down to here, and buyers go, oh no. And the candle closed, the H1 candle closed here. So the buyers pushed back. Sellers tried to push, continue to push. Buyers go, no. And they push back. And now the buyers are pushing even harder. So that's pretty much how you read these. Here's the same things. You know, buyers pushed up, sellers said no. Buyers pushed up a little bit higher, sellers said heck no, and then they started pushing it all the way back down. So these wicks show you, if you read them and you just follow them, they're saying, hey, you know, we're not going to let price, the buyers at this point in time, is not going to let price go below here. So here you had some pushback. Finally, the sellers, you know, pushed the buyers again. Buyers said no, because if you look left, you see green or you see a wick, that means buyers pushed up. If you look left and you see red, that means buyers pushed down. So right here, you can see, I'm sorry, the sellers pushed down. So you can see right here, might be some tough sledding, because we had 3 hours, 4 hours of sellers. So that's it for today. Let me know if you have any questions. Oh, and remember to hit that like button on the video. So I hope you have a fun and safe Labor Day if you're here in the U.S. And I hope you have a good day if you're elsewhere in the world. And just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.